Hi guys, this is Maurice from NGT Traders. What I have here on my chart is the euro versus the Australian dollar, and it's the weekly chart. So we are doing our weekly review. Now, as we can see here that last week it was strictly selling activity, and to the end of the week there was some buying activity from the low here back up close to the close of the previous week. Now, what we are going to do here, we are going to take it down to the daily, take a look at the daily. So now we see here that we have a daily bar that closed bullish. So what we see here, what I'm seeing here that's set up is appeared to be a flag pattern. So in order to see it much better, let's go down to the 4-hour chart. Okay, so this is a 4-hour chart, and as we can see here, this setup here, which is a flag pattern, this is a flag pattern that we got here. So we are looking now to see a breakout of this flag here in order to initiate a trade. So if the upper trend line here is broken and it's hold above, in other words close above the trend line, then we'll be looking to buy this pair, and we would be looking to target the 1.50730. So that's the review for Euro Aussie. Let's go to the next one. So this pair is the US dollar versus Japanese yen, and it's a very bullish pair. We are looking to go bullish on this one, even though there was some sell-off last week, but we consider this one still bullish. So let's jump to the daily chart. So we see the daily chart here pull back for 2 days, and the daily is bullish. Let's see how the 4-hour look. The 4-hour is bullish. So what we ideally want to see here, we want to see a break of this flag pattern that developing on this pair here. So a break of that flag pattern would initiate a trade to the upside for us. So this is what we are looking for on the US yen, a break to the upside, and we are targeting the 115 zone. So here we are now on the New Zealand versus the US dollar weekly chart, as we've been tracking this pair from the beginning of the month, and we can see here that this week candle was swing high and swing low. Swing high and swing low is qualified by a long wick at the bottom of the bar and a long wick at the top of the bar. So now when we have this kind of scenario, what we want to ideally see is a breakout below the low or above the high, which more than likely I believe it will break the low. But for this week, I would expect the market to range in between these zones here. I would not expect it to break out of this zone this week, or if it does, then we would be looking to short this pair. So this one is the Australian dollar, and we are also tracking this one. It's very similar to the New Zealand dollar. So what we do have here, we have RSI break below 50, went above, break back below, and this is the weekly chart. So what we are looking for is further continuation to the downside. Let's open this up. Okay, so we can see here that last week there was some sell-off. By the weekend, buy it back up, but I still have a bearish expectation on this pair. So let me go to the shorter time frame so we can take a closer look. So what we have set up here is a trend line. So the break of this trend line here on the 4-hour chart. Now we are on the 4-hour chart. So we want to ideally see this trend line broken, and ideally below the 73783 level, and then we'll be looking to short it. We'll be happy to short it from here. So again, this is Morris at NGT Trading Group, and these are the pair that we are looking at this week very closely. So I hope to see you in my next video.